Good afternoon, everyone. This is Tim Knight with the Slope of Hope, and I wanted to talk about just a couple of things. First, Dell, and secondly, the market in general. Now, the Dell thing is an insight that I had yesterday, which I wanted to share with you, which kind of goes to my own trading. As anybody who's been to Slope even a little bit knows, I tend to have a lot of positions. And as many of them as there are, Dell is one I don't even know if I've ever traded before. That may seem incredible because this is one of the most widely held, widely traded stocks in the US market. But the reason I had sort of shrugged it off is because I'd considered it kind of boring and battered down. I tend towards stocks that are sky high but are showing signs of breaking down. And Dell, as with, say, Cisco, is a stock that seemed to me sort of battered to pieces and really not worth monkeying around with. But I was thinking about this yesterday. I didn't even realize earnings were announced today. I was just sort of musing about Dell for reasons I don't even remember. And I took a look at the graph, and two things sort of puzzled me. One, why is Michael Dell one of the richest men on the planet with a stock that looks like this? And two, how far might this stock go down in price? And so I looked, instead of a 10-year daily graph, I looked at the entire history of Dell, which answers both questions. And this is a graph that I'd really not looked at before. This is a monthly graph. Let me change this to a daily. So the answer to question one, the reason Michael Dell is so rich, is because of this. It may seem hard to believe, but there was a time that Dell was like Priceline, Netflix, and Google and Apple all wrapped into one. This was the killer stock. This stock had gone from a nickel. This is a great opportunity missed here. A nickel up to like $60 over the span of a decade. Fortunes were made based on this kind of movement. And as you can see here, the stock did a little bit go up for 10 solid years. So Dell was a phenomenal stock. It made things like Netflix look like nothing. Let's take a look at the percentage graph. What did this move? 105,000%. This is a mover, and this is split adjusted, obviously. So this is why Michael Dell is a multi-billionaire, and why this is such a widely held stock. Now, it started to kind of not being so amazing in January '99. That's when the straight up ascent stopped. But it still sort of kind of kept going up and reached its ultimate peak back in March 2000. Now, since then, it has been a DAWG dog. It has done diddly squat, and so I hope Mr. Dell sold a fair amount of stock when it was back at 60, because it's been just a piece of crap ever since then. And it's no shock why. I mean, when you look at Steve Jobs and Apple and all that they've done, it's no surprise that Dell has got the absolute stuffing kicked out of it. And although I've mentioned it, I have to rush to the side of my hero Steve Jobs, who really doesn't need it from anybody anymore. But I just never fail to mention this story that Michael Dell, and maybe this is God's punishment for this sort of hubris. Michael Dell, back when Apple was here, $3, very nastily and arrogantly said that Apple should close up shop and give the remaining money back to the shareholders. And Apple's been exploding higher ever since. So that was dumb. Anyway, back to the topic at hand. So anyway, as I said, the original two questions were, why is Michael Dell rich? Question answered. And how far could it fall? Given the very long-term history of this stock, as you can see, there's plenty that it could fall. Because this whole ascent represents so much empty air. Now, do I think it's just going to fall until it gets back to 40 cents? No, of course not. But because, the company has grown a lot since then. So from a revenue perspective, it's a lot larger of a company. But the fact is that from a price perspective, there's very little holding this up. Now, as I said, I honestly didn't realize that today was an earnings day. But based on these musings from yesterday, I took a hard look at this and I set a stop. I shorted. It wasn't a huge position. As usual, my positions are pretty evenly sized. But I, for the first time maybe ever, I shorted Dell today with a stop at 1238. And as I'm speaking now, it's down 1.74%. Because, I mean, I haven't even looked at the announcement or anything, but I guess earnings were not what people had hoped for. And so it's trading, down around here or something like that. But anyway, this company has not been doing great things from a product perspective, and it's certainly not doing things from great things from a price perspective. So this is a very, very clean position for me because that stop is very well defined. It's very low risk. And even though I've just shorted it, it looks like it's already moving in the right direction. So, yay. Now, as far as the markets go, I this morning had sort of laid out my kind of multiple failures on the bull's part, and that still holds true. So, what's next? What else would be of aid to the noble bearish cause? Single bars answer that question. It's very, very simple. The goals are threefold. First one is the low here, 1066.25. Next one is the low here, 1050.75, set back on July 20. And finally, the big kahuna, the one that matters way more than any of the others, is the low of July 6, 1,275. You may say, duh, because those are respective lows. But they're still important because I think they represent successive victories on the bear's part. Now, should we, in the coming weeks, indeed hack through those, when do we cover? The progress the bears have made successively here, as I'm pointing out, each time we've gotten a little bit lower. And so even though I've been banging my fist on the table about 925, naturally, if we breach 1,000, I'll be sort of wringing my hands about that because, it would be sort of kind of appropriate to not get to 925, but more get to 975, if that, before springing higher. I'll just kind of see what comes. What would be much easier, of course, although we rarely get what we wish for, would be for some exigent event to cause some kind of hard push to 925 so we don't have to think about such things, and that would make it really, really obvious where to get out. Because when we look at the S&P 500 graph, and these are, as I've pointed out before, these little blue circles here are the places between which I believe the market's going to fall before bouncing. That's a huge, huge range, but this green tinted area is sort of my goal as to how far I think things would fall for the year before I really cover things up. So the bottom line is that today was very constructive toward this goal. I think this whole OPEX, OPEX weeks are always bullish, is helpful only insofar as it made the prices more attractive for me to short into. I hope / am guessing that Friday will be another down day considering today's performance, because let's face it, there wasn't any monstrously bad news to drive things lower today. But anyway, I'm very short, 275, count them, 275 positions. Most of them pretty even. Handful of big ETF shorts there, but nothing of great size. And we will see how it goes. So feeling pretty good about the market, feeling pretty good about my positions right now, and hope things are going well for you too. I think that next coming weeks will basically be the defining moment for the bears this year, and that'll be kind of it. I'm not sure what else I'll talk about if and when we reach that point. Good night, and good luck.